Traders, how you doing? Tom Willard with Tom Willard Trading, welcoming you to another video. It's been about 3 months since my last post. Want to come back with some ideas. Earnings season kicking up, and we just had some violent days to the downside. In a majority of these days here, you'll see here on the QQQ daily chart here on the upper left of my screen. Um, Pretty much 1, 2, 3, and then a small digestion day, 4, 5, couple like 6, 7 trading days here, down for the most part. Obviously, we had a pop up on Friday, but pretty big move in the grand scheme of things on a daily chart. Now, if you look at a weekly chart, you can see we had two similar moves here, very pronounced, quick, 1 to 2 week. This one was about 3 or 4 weeks before it digested, calmed itself down, then went back up. So we could get more of that sort of action here. I would not expect it to come straight up like it did this last time, but it's definitely possible. I am there's not a whole lot of short ideas because everything that's on the short side has been pounded. We've got a few ideas here and there, but overall the market does look like it wants to kind of hold serve here. And on some of your favorite ideas and stocks, especially strong uptrending stocks, and I'm nibbling in. So I'm going to share some of those ideas here with you, and also talk obviously about stops because those are a critical part. Because one of my positions actually got stopped out. A few of them actually did, and a couple of them I took partial profits out because I was in them for a while. So some stocks that I've been sharing with you over the last several videos. So let's get right to it. First thing let's talk about before we talk about specific stock ideas is the actual major indices. So I'm just going to look at the SPY, which is the S&P 500 ETF, as well as the QQQ, which is the NASDAQ ETF, tracking ETF. You'll see here on the daily chart, weekly chart upper right, and then 60 and 15 to a lesser degree when we're talking swing trades. Because most of my videos are going to be about swing trades because most of you are, well, pretty much everyone can swing trade, right, for the most part, or longer term invest trade. Day traders, there's probably not as many of those that are watching these videos. But if you are, I do day trade, but I just don't do videos on the day trading at this point in time, as I want to appeal to as many people as possible through this free YouTube video channel. So spiders, you'll see here, we've got pretty low volatility in general moving up to these last 6 or 7 trading sessions. And then we just had these massive down days and volume really picked up. And again, just put in perspective, because people are panicking, I've heard there was some, on this day here, there was a lot of lack of energy to the downside in a sense, meaning that people were not scared, really complacency on the selling, and then this day kind of got more people's attention. But just keep in mind here, the weekly chart can tell you we had 2 weeks here of really hardcore down with volume, and then we recovered, retested the low, and then have been moving back up here in the SPY. Similar type thing, 2 candles, right? 2 candles. So let's see how the next 2 to 3 weeks play out. Okay, the trend is still up. Although when you get a big hiccup like this, it can definitely start to test your nerves. And it should. You should always be aware. This is not going to last forever. At some point, we're going to get a more deeper correction. I don't know what it's going to be. 30, 40, 50, 80%. I can't tell you. I would lean toward the latter. It's going to be pretty deep and pretty steep, much like we experienced in 2008, in my opinion. Could it be coming? This could be the start of it. Okay, it could be another year before it comes around to fruition. But at some point it's coming, and you've got to have stops. And so stops save me. I'll show you a couple of my trades that I've talked about over the last several videos that have saved my bacon on the stocks, and so or on the stops, and locking in profits or protective stop losses, taking losses that I anticipated on taking. And one other thing I want to point out to you is that it is earnings season, so be aware of when the stocks you own report. They will often gap, and oftentimes they'll gap past your protective stop losses, okay? Or with a cup is half full mentality, they can gap past your target levels, which is always a nice problem to have. So keep in mind that, a lot of times what I'll do is I have a full-size position of something and it's going to earnings the next day and I've got some nice profits. I'll take a half off the table, or maybe even 75% of the position off the table, but I'll typically hold a piece, maybe a tenth of it if that's been really profitable through earnings, or I may sell all of it. depending on what my situation is. Or I may hold all of it if I don't have as much of a position, that sort of thing. Because sometimes I'll leg into positions, thirds, halves, um, even quarters in some senses. So what we got here on the Qs is a very similar thing, right? You've got two big move down, third big move down here off a new high, and really not any more aggressive than these two were. Okay, so really the next few weeks will kind of tell us what's going on. Now this could continue. This doesn't have to mirror these. Okay, it could be literally be the start of a collapse that move down to the 200 period moving average on the weekly chart. You can see we already breached the 200 on the daily. So it could be anything, but just realize that typically, if you're thinking, well, this time it's different, well, it doesn't look much different than this, other than it's now further in time. The bull market is extended even longer, making the odds of a more significant correction higher, in my opinion. Okay, so a perfect example of stops and how they can help protect you. A lot of stocks I trade, I'll trade for a long period of time. I'll buy them, I'll sell pieces, buy back pieces, and that sort of thing. And we're going to talk about one of those examples here shortly. But this is one where the stop really, I took the stop and it was like, wow, this really played off. And sometimes in our minds we blow off the instances of this, meaning you'll remember the situations where you took your stop and then the stock turned right around and ripped higher and you were pissed off about it because you're like, oh, see, I gave up all this money. You tend to focus in on those, and what you miss are the ones where your stop gets taken out, you take your stop, you leave, you move on to something else, and you come back and see what happened as it did here. Scientific Games has been a strong stock. You see April, July this year has been trending, or of last year has been trending up here on the weekly very strongly, right? Moving up, breaching $55 a share at the beginning part of this year. Then it pulled back, and then it based here sloppily, right? And it held, made basically an inverse head and shoulders pattern here. You can see it. I'm going to see if I can pull it up on the daily. I'm not sure if the daily would be wide enough here. But, yeah, there it is right there. Inverse head and shoulders on the daily as it popped up through here and then went back higher. So, playing this on the long side, I own shares. I went up here. I was like, okay, great. And then when it started coming back, okay, I'm thinking, okay, another buying opportunity. Look for another buying opportunity. When things get extended, you take profits as it gets farther away from the moving. Notice how it stays. It really doesn't get more further than this distance from the 20 period moving average, right? Before it gets kicked back. Here, same thing, around the same distance, got kicked back. So that's a way you can look at taking partial profits on your strong trades, and then looking to buy back those shares at a cheaper price. Here you got a pullback. It popped up. Okay, and when it did this, okay, you've got another entry here. Now look what happened here. Then the next day it came and it broke through this stop level. So what I did was I sold my shares here, part of my shares, and then put the rest of my shares in for a stop under this inverse head and shoulders. Okay, and sure enough, that very same week it came down and took out that same stop, or that second stop. So let me show you here. Let me get forward here on the daily chart, June, July. So it came down right here. So I'm out, okay? And now someone would say, well, now you're out of the position. It's like, well, I'll look, and maybe it holds and sets up again. Again, we'll talk about this in some of the other ideas I'm going to share here with you in this video. But now look at this thing. It's gone from, the stop was about $39.50 a share, and now it's gone all the way down to $23.47, really at the 200 period moving average for the weekly chart. And actually, I'm looking at this. This is on my list. I did a scan just now for next week. This is one I may buy next week as a nibble going into earnings. Okay, it's been crushed here. It's coming down. It's not really capitulating volume-wise yet, but you're showing a higher low. And so if you can hold this higher low, I may try to nibble a quarter position to try to ride this back up and see when earnings comes up, and then maybe bail prior to earnings or what have you. But this is something that's been so crushed that I may be looking to buy. But it's more advanced buy. You got to know what you're doing with your stops and your profit targets. And I'm not talking about buying this and holding it to 60. Okay, I don't think that's going to happen. But some sort of retracement back up, maybe to this $40 level, is perfectly viable, or even somewhere between 30 and 40. But as the bars play out, it kind of lets me reassess what my target would be as I move forward, bar by bar by bar. So this is one where, look, I got a 39. I'd be $16 per share more in the hole, approximately, had I not taken that second stop. And thank God for the first stop I took here, knocking out shares at around the $44 level and not locking in those profits there. So a perfect example, take your stop. If anything, burn this into your memory. And I'm sure you've got plenty of instances where you didn't take your stop and it's been your rear end's been getting handed to you. So make that the lesson, and not the lesson being when you take your stop and the thing reverses in your favor. I don't know why, as human beings, we tend to focus more on that, okay? But we do, and then we lose sight. We get complacent with taking our stops, and then basically you turn um, what was a profitable trade or what could have been a small loss trade into a massive, debilitating loss. All right, so 3D, this is one I've been trading on and off over the many previous weeks. You can see there's been a nice moving uptrend here on the weekly chart. Daily chart here, big monster gap up, strong bar here. Okay, looking for another way to add more shares. I still have quite a few shares in this position. Um, and now you can see the relative strength of this compared to the market. It's come down. It held the gap area around $16 a share. It came as low as, looks like 16.51. Or no, I'm sorry, that was the low of the day was 16.30. Okay, so you've got a line in the sand here on your stop at around $16 a share. Maybe 15.50, maybe 15.75, wherever you want to put your cushion in. And you've also got the crossover of the 20 period to the 200 period moving average here, which is bullish, as well as you can see it kissed off that 20 period and held serve. So this $15 mark, or maybe if you want to be safe, 14, okay, is a pretty good solid area. Now you can buy this if you're aggressive right here at about $17.50 a share if it breaks up there with a stop underneath the $16 mark. So you're risking $1.60 for this thing to go higher. I already own a bunch of shares in this, and I actually took profits. So I had actually a two-sized position on this, and I took off one of my positions in this area here on the pullback. Okay, because it was up, it was extended. Notice how extended it was from the 20. It's up here, then it's $22 mark. If I draw this out, let me see. You can see the resistance at 22. Okay, why I took profits at that $22 area, which actually in hindsight is brilliant. I got lucky. Usually you don't get out near the highs. I did on just now. Again, I didn't sell all of it. I still hold a position. Okay, and then it came down, and then it popped down here below. Now I'm watching it closely. I'm saying, okay, where is it going to hold? Now my stop right now on the remaining shares, which makes everything profitable, is right under the $16 mark. Okay, but as it plays with this area, I want to see how it behaves day to day, bar by bar. See if there's a flush out, okay, and there's a way to get back on. But this is a perfect example of where locking in profits when it gets extended from the moving average is a good idea. You can see here, the extension here is about the same as here, and then this after this bar, because of this gap here, really got extended, pushed up here in volume, and then when it couldn't make it, barely made a higher high and started to fail, take some profits. Okay. So 3D is still on my radar, looking to buy more shares, buy back that second lot here at a cheaper price, around $17.50 to $18 a share with a stop right under 16. Okay, here's another one of my positions that I've owned and selling into strength and buying back on weakness. And notice here, if you go back to the stock, the QQQ and the SPYs. Now again, this is a smaller issue. It is a very low volume issue. Okay, originally this came up in the videos because I had people emailing me asking me for cheaper stocks to buy and not, Googles and Amazons where they couldn't afford them. They wanted something cheaper. So I started searching and found this little gem and been riding this thing up for quite some time. Okay, taking profits on it. Now notice here the relative strength. It's come down just like the market has, but notice how controlled it is. Look at the volume. Okay, this is oftentimes the weak hands that are getting shook out. There's not a lot of volume. There's not a lot of heavy exchanges of shares being bought and sold. Okay, so this and it's coming to the rising 20. Looking to add to this position if it can break above this $3.10 mark or $3.20 mark. Now, granted, it's a pretty big stop because the low here is around 275, I think, ish, 270, yeah, 275. So you're looking at a 50-cent stop on a $3, 50-cent stop on a $3 stock, which is huge. Okay, so it's volatile. Again, I would not be buying massive amounts of shares in this because of the liquidity issues. Okay, but to your plan, how you want to do it. Some people are buying tons of shares. Totally up to how you want to do it. But I would suggest you don't trade to your plan. This thing looks higher. It looks strong. It's had this strong move off of this. And notice that the panic selling and this thing cannot find anyone. It's not even really trading very much volume at all. Bottoming tail, bottoming tail. Interesting. Keep this on your radar if you like cheap stocks, but keep in mind it's very thin. If you bought 10,000 shares of it, that's a third of the volume that it did on Friday. So keep that in mind. Few other ideas I want to share with you. ATKR, I think this thing is in a nice uptrend here. Notice the break to a new high. Notice the pullback here. It failed this pattern, but then it came down with the market just here. Okay, but notice it's at a minor support area here at around $24 a share, with more support at 22. So again, this is another thing I do. So if I'm feeling a little frisky and I want to get a piece of the action here, and I don't want to wait for the actual setup, and again, this is more advanced, but I'm sharing this with those of you guys that are emailing me and want some advanced stuff, so I'm going to put some more advanced ideas on here, is I might take a quarter position here in the 2370 where it opens on Monday. Say it opens at 2374 or 2350 or 23 or 24 in this area. Pick up a quarter position, put my stop under this low here with room. So say 2150 just to be round numbers. Okay, and look for it to set up and then add to the position when the actual pattern sets up. If you're feeling like this sell-off is gonna bounce, okay, it's more risky. You have a higher, my win percentage is a lot lower on trades like this, okay, but when it pays off and when it rips, it can be a huge move. One of the ones I did this on Walmart on this breakdown that couldn't fall through, getting in here. 85, wrote it up to 100, sold a third of the position, and now still own 2/3 of the position. And it's still, this, look at the relative strength in this one, by the way. I might as well share it with you, right? If this can get above this high, above this $98 mark, I'm buying more. I'm buying that back, that third of a position that I sold, buying that back in and looking to ride this back up. But you got basically a cup and handle. Volume is a little bit higher here. I mean, compared to the big spike up here, it's holding. But you know what the market did the last 6-7 trading sessions? Look what Walmart did. That is relative strength, my friends. But it's sloppy, right? And if you get it at 98, your most legitimate stop is 90. Just around this 90, probably about 93. But let's just say 92. It's a $6 stop. So it's got to go 18 bucks to make it worth your while if you're shooting for 3-1 or to risk. Well, 18 bucks puts you at 108, 118 minus 2, 116, which is beyond this high. 110 to me is your first target area. Obviously, if you can get in lower here, 94, your first target will be this 100 area where it topped out at earlier. But then really you've got a pretty free and clear place for it to move another $10 to $110 a share. Okay, so just some of my thoughts on Walmart, and I actually own this one at this point, 2/3 of a position. This one's a rock. I mean, it's sloppy on the daily chart. Okay, so this is something that you want to buy 100 shares of this, you're looking at shelling out 29 grand, right? And if it moves, it can move pretty freely. You can see it's moving $10 to $15 a day in some cases. But on the weekly chart, look at the control on Churchill Downs, right? What did the market do? Look at what this did. It couldn't break 270. So you got a line in the sand around 270. You could buy this if you wanted to right now at 280, even though you're anticipating. So therefore, your win percentage is going to be lower. Your best bet is to wait for it to break 290, and then of course your stop's gonna be 270. It's a $20 stop, so you gotta make 60 bucks on this thing to make it worth your while. What's the tip top here? 314. It's gonna be a tough sell if you're looking for 3-1, right? Now it doesn't mean you can't go higher, but this has been a long uptrend. But here's another example of beautiful relative strength. Gold. Remember I talked about the goldies, and I actually tweeted this that I was a buyer of this thing on this update here, 115. Okay, picked up gold GLD shares at 115. Now I'd owned this up here, the 126, 128 area, and dumped it when it broke this 123.50 stop area right here. Now, are you think I'm glad I took my stop? Yeah, because I just bought those shares back here at 115. All right, off this move down, flush out, double bottom, massive volume up day, breaking these resistance areas. Now you got a possible continuation, man. I'm looking to add to the position over 116. You could move the stop on your second position to 115 or all of it if you want to, depending on how you want to manage your trades. 114, you got the gap support there, and then of course your full-on hardcore support is the bottom of the lows here, about $111 a share on GLD, where I just, like I did here, fold the tent, get your money back, and move on and watch and see if it sets up. But this gold to me looks like it's going to start moving higher. You can see the higher lows here. It was trying to uptrend, very sloppy. I was looking for a break to add more shares over 130, and notice it never got there, and then it came down, took out this pivot, took out this pivot, took out this pivot, took out this pivot, didn't take out this one, took out all this support area here with this one swell swoop. Double bottom, this volume bar, and like I said, the behavior, the action of this thing, I wanted to get that back in on it. So GLD, I'm in, looking to add to the position again if a break over 116. Another thin one, 116. Okay, Monarch Casino Resort. Now, all the casino stocks, let me just go through them real quick. Wynn, ouch. Las Vegas Sands, ouch. Look at that. Woodshed, MGM, not quite as bad, but not good. Caesars is getting crushed. Boyd, one I used to own, got stopped out of. Definitely stronger, right? Look at the strength compared to those other ones. So is Boyd still on my watch list? Yeah, it is. Keep an eye on it. Here's your support around $30 a share. Looking for a possible double bottom, okay? But this could be a double top. And if it breaks that area, this could be curtains for this thing. But MCRI, look at the strength in this one. Can you guys see that? Rewind the video if you need to. Higher lows. Okay, but this thing, 60,000, this is like the LRAD on the thinness. It's more expensive, okay, $44 a share. But I wouldn't be buying 10,000 shares of this thing because you're going to get the spreads are huge. This isn't a day trading stock; it's too thin. But the relative strength interests me, makes me think, what do people know that we don't know that is holding up? Okay, why are there not enough people who want to sell this thing, or people buying it when people do want to sell it? Okay, maybe acquisition. I have no idea. Okay, but the chart, that's the thing, is you don't have to know. You don't have to have insight. If you got the charts are telling you what everyone in the world knows that's trading this thing, because their actions, they can't hide them. They're on this chart, right? And what this is telling me is there's a lot of support for this thing. I'm telling you, keep it around. I sure as hell am. All right, last but not least, because I want to wrap it up here, but I want to give you an example. This is another one I've owned, and I thank God, again, stops. Sold out here at $39 a share, okay, on this break. Took profits on it, been riding this thing in and out, on and up. Just, it's been an awesome. This hack ETF has been fantastic. But you'll notice a lot of his names: Proofpoint, Cyber. Cyber's another one I got stopped out of last week for nice profits. Trying to think, FireEye. They're all getting crushed. Okay, now this is the ETF that kind of tracks all of them. You can see, but this is one of my my own techniques that I've used, and I'm not going to get into much detail, but I'm going to share it with some of you guys. It's kind of the I call it the tornadic effect. It's basically an expanding range. So a lot of times what you're looking for is in a typical triangle type pattern, you're looking for lower highs and higher lows, a compression, if you will. But what I'm finding it a lot of times is you get higher highs, you get lower lows, meaning you get an expanding range, kind of a megaphone, if you will. If you draw lines here, there, I got my art out. You can see here, see the expanding range, the lower lows and the higher highs. So a lot of times what happens is this lower low will, what do people do, right? And what was I trained to do? And most technical traders, you put stops in at support areas, which could be pivots like these here, right? Or bases, right? Which is basically here on a smaller time frame. But you've got so when you get the violent move like this and it takes out these areas, those are people's stops, okay? But keep in mind that for every selling, for a trade to happen, there's a buyer too. So someone's on the other side of these trades picking them up. That doesn't mean they're smart. Doesn't mean they're going to be right. The only way whoever's going to be right or wrong, it depends on time and where the stock price ends up. If this thing goes to 0 or if it goes to 100, okay? But what I found is a fun trade that I do, and again, it's more aggressive. I've got many years of experience, so I'm just going to share the concepts with you and let you play with it. Take your own statistics. Run your own models, okay? Backtest data before you start doing, and I hope all of you are doing that. You're backtesting your trading technique. You have to have an edge. And if you don't have an edge and you're just, willy-nilly picking stuff because you think you see something, you're going to have a short career. Your money isn't going to last your dalliances in, in what you think you may be seeing. So, violent move down. Here it is on the daily chart. Takes out the 200-day, okay? Takes out the pivot here, the pivot here, the pivot here, pivot here. Took out all this stuff. Even took out these bottoming tails here. You can see it went lower. So what I find is this is a pretty low-risk area if you are disciplined. Okay, a couple of caveats. One, you have to put in, you get in right in this area here where it took out the high of this bar, and you put your stop in below this low. Now again, I strongly suggest you don't pick the exact. So the low is 35.21. Don't stop it at 35.20. Give it some room. Okay, what room is? Well, that, I have my own system. That's a secret to me, so I don't really share that with people. But come up with your own. Do back testing. Find out for yourself. Okay, I've spent years doing this. I know where I want to put my cushion. Now, does it always work? No. I get stopped out sometimes, and literally to the penny, it turns around and goes ripping back the other way. That happens. It'll happen to you. No matter how smart or cute you get, stuff's going to happen to you. Okay. But in the long run, what I find is my cushions work out well, and they keep me in trades that I need to be in, and they get me out of trades where it's time to say, hey, fold up the tent, move on to something else. So when you get a new low like this, oftentimes I find a way to buy on a smaller time frame with a tight stop, get in, not full positions, typically quarter, thirds, halves in a lot of cases, and then when you get confirmation, tack on that other third, tack on that other half, but have a tight stop. And again, if you have to, if you got no discipline, set it up in your system so the system takes you out. Now, the only caveat is that's one caveat. Make sure you have the discipline, you have the stops put in to do that. But these megaphone patterns can be very, very juicy. Considering if you took this low here and rode it up to the new high and got out the new high, then shorted it there, now that it's taking out the new low, you buy it and wait for it to just break the new high at 41 and do that. A lot of times this will do it, but a lot of times what happens is this will megaphone, usually 3 or 4 iterations, and then it'll compress, okay, or it'll just break one way or the other, is what I've found, okay. So that's one caveat. Second caveat is you got to know when. This is an ETF, so you might want to find out when the major players that are contained within this ETF, that this ETF represents, are reporting, because that will affect this. Okay, so this might be a little more difficult because you got to do a track, look up what are the major stocks and what percentages attribute to this ETF, and then figure out when they report. Okay, so if you're trading like Walmart, for example, or Amazon or Apple or whatever, look when it reports. Okay, and oftentimes what I wouldn't do is ride that into a report off something that's megaphoning or tornadic action such as this. So anyway, that's my deal for this time around, guys. Have a good earnings season. I hope you enjoyed this video. Hope you found it useful. Watch it multiple times. I go kind of quick. I talk fast. I don't like to tie up a lot of time, mine or yours. So enjoy. If you got any questions, hit me up, tom@tomwillardtrade.com, or just put a post here or ask a question on the video, and I will get back to you. All right, guys, have a good trade. Trade safe. And again, remember, take your stops, take your stops, take your stops. Take partial profits when things get extended or they hit your target. And always look for buying. Right now, I'm looking more for buying opportunities on this move down. But again, small positions, let things settle in. Let them kind of churn a little bit. I doubt it's going to turn right around, go ripping right back up to the highs. Typically, there's some gyrations and there's some bouncing around, and there's ways to get down there. So you may also, you could put an order here to buy at 35.50, just using this as an example. Let's go back to the Qs, actually. You could put a limit order in to buy here at 169 and then put a stop at 167, right? And just see if it can get down there, because you'll get a lot of this taily, overlapping, soupy, crappy, ugly up and down action where the candles don't really mean as much. A pivot point or a base, you may think of support, resistance, that sort of thing. They're less reliable in volatile times like this, okay? So keep that in mind, and that's where the cushions can come in, okay? All right, hope you found this useful. Until next time, this is Tom Willard signing out. Have a good one.